Hey guys, we're back. It's another week of options, and we're gonna do a quick review. Not a whole lot, but I did open and close some stuff, so it'd be interesting to see. You probably can see it on your screen right now. But I got a question for you guys. I've been thinking about moving this video to either Friday evening. No, that's not really a good one. Either Sunday morning or Monday morning. And that would just give you a complete week, Monday through Friday type thing. And then possibly I can talk about what I'm, kind of like my plan of what's going on for the week upcoming. Let me know your thoughts. I don't know. The reason why I did the Wednesday videos is because if you know anything about YouTube, my Saturday videos are, what gets the views. And then it just kind of dies out during the middle of the week. And that's why I kind of stuck it on Wednesday, just kind of give the channel a little boost in the middle of the week. But I don't know if it really matters because these options videos are actually the absolute worst performing videos that I do. So I don't know if it would be better on a Monday or even a Sunday. But I don't know. Let me know your thoughts. So we'll go through this real quick. What this is 5 trading days, right? It was from the Wednesday prior to Tuesday close. So April 28th through May 3rd. Was it the 28th or is it the 27th? 27th. So April 27th through May 3rd. And what we're going to do is go through the closings, and one of these is going to have an opening and a close, so we'll talk about it twice. Well, I'll try not to talk about it twice, but if you guys remember the 1111 trade from last week's video, this is basically kind of an insurance play. It's a downside play, like if the market goes down, but it also can be profitable if the market goes up slightly. And you'll see why here in these two trades, right? So I put these on these QQQs. And I bought a debit put spread at 320 and 315, and I paid about $1.70 for that because you buy the higher strike and then you sell the lower strike. So if one's 1083 and one's 19, you pay the difference in those. But then what I would do is sell a put down lower at 280 to finance that difference. And then I added on this one, I added another put to increase the premium received. Well, I was able to close that out in 2 days. So I'm sorry, I was pointing on the wrong ones, but these were the opening prices. These are the closing prices here. Let me get rid of these fees because those always get in the way. So I closed out the 260 for $1.18, made $59.60. Closed out the 280 put for $253, made $124.60. Bought back the 315, for $9.19, made $315.59, and then I sold the 320 for $10.83 and lost $351.40. So what that ends up being is a net gain of about $140, right around there. So net gain of $140 in 2 days. Maybe I can zoom in on this one more shot. There we go. That's probably more normal. So that was the QQQ insurance trade, or the 1111 trade. And I'll link a video to explain that one that I did quite a while back. Camping World, they did report earnings today, which is May 3rd. They kind of missed, but then they didn't really. So not much happened, but I closed out this put just in case. It was a 26 strike. I closed it out for 20 cents. So I made $50 in 40 days on that one. I would have been assigned those if I wouldn't have closed it out. I closed out a Ford covered call for 4 cents, because it had quite a few days left on it still. Made 28 bucks there in 24 days. Closed out my covered call on Camping World as well. Closed that out for 40 cents. Profited $14.40 in 10 days. The reason why I wanted to give Camping World some room, just in case it got squeezed out and shot to the moon, because it is probably the highest shorted stock in the market today. So in case it did the AMC or GameStop thing on it, I just didn't want to have a call capping my top side, so I took that off. And then this is an open and close combination here, because that QQQ I closed out on 428. The very next day I opened up a new 1111 trade. I bought the 310, sold the 305, sold the 260, and sold the 240, and that was for a net credit of oh shoot, I need to make a column to show this. But then I exited the 240 at 111, made $49.60. Exited the 260 for $2.13, made $102. Exited the 305 at 958, made $338, and exited the 310 at 1115 and lost $373.40 for a net profit of 140. I actually did it around here. Nope. 117.38 was the net profit of that, and that was in 2 days as well, because I put this on Friday and I closed it today, Tuesday. So that's it for the closings. Let's take a look at the openings. We'll just sort that. Come down to the 27th. I sold a put out to June 17th on Smith & Wesson. I did a 1250 strike, collected 55 bucks on it. QYLD, I sold a 1950 put out to May 20th, collected 30 bucks on that one. Only time I sell puts on QYLD, I got some. I'm probably going to be buying some, about 400 shares here on May 20th. I try to get at least more than what the dividend will be. So the dividend will be 1% of whatever the current stock price is. If I can get more than that, then I'd go ahead and sell a put. But of course, QYLD's been dropping this past week, so. But either way, got 30 bucks for that one. And there's that QQQ put spread, 111 spread that we just talked about. Intel missed on earnings. I already have a 4250 out. So I went out to June 17th and I sold the 3750 strike on Intel. Sold 2 of them, got 52 bucks a piece on those. To me, that's almost like free money. It's 103 bucks out to June 17th on Intel. Now, I wasn't gonna play Camping World earnings, but I figured, what the heck, the premium looked good enough, and it was able to get low enough. On May 2nd, on Monday, Camping World was at $25.90 or so, and I sold a put down at 20 bucks out to June 17th, and I got 100 bucks for it. So I think that was well worth it. Camping World didn't get there. It went up after that, so that's in profit already, and I might take it off. I don't know. We'll see. And then I wrote a couple strangles on T and F. T, I did a put out to June 17th at the 18 strike, got 41 bucks. And then I own T, so I did a covered call out to June 17th at 20 bucks and got $34 for that one. And then on Ford, I also own 100 shares, so I sold a covered call out to June 17th at 16 bucks, got 29 bucks for it. And a put out to June 17th at $12 and got 35 bucks for it. So just little bits here just to add a little cash to the bucket. So now let's take a look at premium cooking. So here we see week ending Tuesday, May 3rd. We closed 5 positions technically, because I count those 1-1-1 spreads as one position, but it's really technically, actually, it's way more than that. But closed 5, open 9, even though part of that is in the QQQ spreads as well. Profit realized for the 5 days, $357.67. Premium sold, $451.38. Total premium cooking, $3,848.79. Most of that is coming off May 20th, so a couple more weeks. It's going to be interesting because I have a ton of stuff in the money, and we'll see what we have to roll, what we can take, and all that good stuff. So stay tuned. Maintenance margin, 37,600. Ticked up just a bit. Buying power usage, 33.54. Cash went down to 63,454. Reason why is I'm buying stock. I'm buying income funds. You'll have to check out this Saturday's video and see what I did for the month of April. But I did spend a bunch here in May already. Investing into JEPI. No deposits, no withdrawals. Net lick clawed back up to 112,100. Return on maintenance margin, that's the profit realized divided by the maintenance margin of the week prior, so 0.98%. I'm happy with that. And then return on net liquidation, 0.33. That's the same profit realized divided by last week's net liquidation. I'd be happy with 0.33 if it would be consistent. That's like a 17% annualized gain. I'd be happy with that one. So that's it. Like I said, I got 34.56 going out May 20th. We'll just have to keep our eye on that. So let's check out how the overall portfolio is doing. So we got the percentage decrease calculator. We started the year 123,100. Ended the year 112,100, and not ended the year, ended this period at 112,100 for an 8.9% decrease in value. If you compare that to the major indexes here, not doing too shabby. We got the S&P 500 down 13% year to date. The Russell 2000 down 16.5% year to date. The NASDAQ down almost 21% year to date. And the Dow Jones doing the best at 9.5% down for the year. So can't complain too much. NASDAQ down 20%. I always say this, but this 20% mark is a nice level that I think a lot of people would buy up. It happened the last couple of times it hit 20% here this year, but we do have the Fed announcing something today about interest rates, so we'll see if if we're able to. We've had a strong past couple of days here, decent strong. We'll see if the Fed kind of wrecks it here today. So we've already probably find out by the time you're watching this, but we'll see if hopefully the market digests it well. And for the past 2 days, it looks like they are. It looks like they're expecting it. So I don't think it's going to be any big surprises as long as they don't go over the 0.5 mark that is expected. So anyway, that's all I got for you guys. Leave me a comment down below. Let me know about the date. Sunday morning, Monday morning. I kind of would prefer Monday morning. But you guys let me know. Hope you guys have a great week. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.